All right, so what's going on, guys? How's everybody doing today? Let me just start the recording here. It is actually pretty rare for me to do a webinar during the day. I'm a pretty active trader, so I'll be trading in the background while I run the webinar, which is fine. We have a lot of great information today. I want to thank Win Investing for letting me present today. Kind of a last-minute notice thing, but I'm always around to do last-minute things, and I'll just multitask, and I'll be trading in the background. What I'm going to teach you guys today, we have a lot of slides today. I'm going to be on for about the first 40 minutes, and then James Romelli, who's one of my head traders and educators, is going to jump on for the live Q&A towards the end. I have to go run and do a CNBC hit, but I want to take you to the nuts and bolts of this. This is how to trade, how to beat the hedge funds in the long term. Your presenter today, Andrew Keene. I'm sure you guys have heard me, seen my presentations. Past performance is not indicative of future results. We have to put a little risk disclaimer in here, unfortunately. Day trading, short-term trading, options trading, and futures trading is extremely risky. They are generally not appropriate for someone with little capital, little to no trading experience, or low tolerance for risk. Never execute a trade unless you can afford to and prepare to lose your entire investment. No trades or recommendations or advice. We cannot be sued for losses of capital. I am not a registered investment advisor. I cannot give you guys recommendations or advice on how to trade your own capital. All I can talk about is how I trade my own capital. So just keep that in mind. Contact your broker or registered investment advisor for execution, margin, and other capital requirements. Everybody watching today's presentation adheres to all risk disclaimers on www.optionhacker.com. and www.alphashark.com. So let's get on with the presentation. I'm not registered, guys. I trade in my own trading account. I have a pretty substantial trading account that I trade on. Today has been a pretty ugly day for me. I am down on the year so far. I am long this market. It's been a little bit ugly. I'm long some oil names. I had some good day trades today. I traded some JP Morgan weekly calls, Exxon calls, Cummings calls. So I've traded well today, but I am net down today. This is me. I studied at the University of Illinois Champaign-Urbana in 1997 to 2001. This is actually me here in the middle. This is actually not me on the right. Everybody, whenever I give this presentation, like, Andrew, you were pretty big. That is not me. I'm actually here in the middle. And then on the left, we see this is Humpty. I'm going to get a better picture in here from Digital Underground. Let me draw his face in here. So Illinois, Champaign-Urbana, Big Ten school, pretty good business school, probably top 10 business school. You know, I graduated with a finance degree and a minor in accounting. You know, pretty good school, but I've never read any coding. I've never wrote any computer programming for trading at all. Everything I do, I trade on feel, gut, instinct, and then I share my trades with my subscriber base throughout the course of the day. You know, I'm very, very in the market. I watch a lot of CNBC. I'm on CNBC a lot as well. So I traded on the trading floor for over a decade. I traded in the Apple pit from 2006 to 2009. I was the largest independent trader. I've made close to about $5.5 million trading throughout the course of my trading career, and that's not giving profits back. That is net profits. And then I've been teaching and educating for the last 4 years. While I teach and educate, I do put capital to work. I do risk my own money throughout the course of the day, trading what I believe to be the only way to make money in the long run, which is unusual option activity. Okay? So I trade unusual option activity throughout the course of the day. So let's go on with the presentation. Just have so much going on here today. Okay, I now live in beautiful San Diego. I'm a Chicago guy, born and raised. Went to high school, went to college in Chicago. I did move to San Diego a little over a year ago. I trade from my computer during the day, so I just wake up in the morning, roll over to my computer, turn on CNBC. I saw the futures down 34 points today. That was not very happy for me, and then I just trade throughout the course of the day. I trade more or less everything. I trade futures, forex, stocks, options, but I really specialize in unusual option activity. Today I'm going to teach you guys something how to trade with the biggest traders in the world. I'm not making these new positions up. I'm not creating new positions. I'm just trying to find the biggest traders across the world and put on very similar positions to them. So I trade from San Diego. It's a picture of my view here on the bottom left from where I trade. I'm on the 22nd floor looking west into the Bay and Ocean. It's my car I bought when I moved out there, and a couple pictures of me from wonderful CNBC. Someone goes, how old is this picture? Because it says oil was $91. If oil was $91, I'd be a very happy, happy man. But oil is not $91. So we have a problem. Okay, what is the problem? We have close to 300 people here today, which is good. You guys are all taking time out of your day. We have some great presenters today. I'll be listening to the rest of the presenters today. I actually haven't heard some of them speak before, so I'll be listening to the presentations today. Maybe I can pick something up on my trading plan. Just like you guys, I watch a lot of webinars trying to pick up, tweak, adjust, shift my trading. Okay, so if I can pick up something that someone says that helps my trading, a couple $100 here, $1,000 here, that's going to really help me in the long run. So the problem is 90% of all traders lose money, and that is a fact, guys. Okay, that is not something I just made up. 90% of all retail traders lose money. But why do they lose money? Okay, there's a lot of reasons why traders lose money. Number one, poor risk to reward setups. So one big problem is poor risk to reward setups. A lot of people try to buy calls for $1. Maybe they don't ever lose a stop loss, and they risk $1, and they're only trying to make 10 cents. If you came to me and said, Andrew, I have $5 million here. I want you to have 95% of my trades to be profitable trades. I would say that's easy, okay? And the one thing you guys got to realize, it's not the percentage of trades that are profitable. I have no idea what percentage of my trades are profitable. The only thing that is important is at the end of the day, is my P&L higher than it was either the day, the week, or the month before. So when I'm trading, I've been profitable 6 straight years, and I've been profitable, I think, about 12 of the last 14 trading years. I haven't lost money in a year trading since 2009. And, we've had some bull markets, we've had some bear markets, and we've also had, some sideways markets. Last year was pretty much more of a sideways market. So you guys need to start following institutional order flow. I'll show you the scanner that we use throughout the course of the day. I'll show you a couple free websites, and I'll teach you guys my proprietary-based trading plan on how to trade unusual option activity. So here's a couple pictures of a couple huge traders. These are the biggest traders in the world. I'm sure a lot of you guys know who these are. Do you guys know who these 3 people are? You get to spit out names if you know who they are. We have Carl Icahn, okay? Has very big positions in LNG, Cheniere Energy, big position in Chesapeake Energy, has a big position in Freeport-McMoRan now, okay? Then we have Bill Ackman, is that one, okay? This guy's in VRX, huge position in VRX, also in Herbalife. Then we have David Einhorn of Greenlight Capital. Micron was his big one, okay? So throughout the course of the day, I'm watching institutional order flows. I'm watching activity, both calls and puts, from the biggest traders in the world. And then I decide if I like their trades, and then I can mimic their positions. A couple really cool websites, guys, I'm going to teach you about for free here. One of them is Option Monster. So you say, hey, where can I get this information? Option Monster, great website ran by the Nigerian brothers. They talk about unusual option activity. You see calls, you see puts in this. So we see some really good stuff that they come out with. The problem is that it's about half an hour delayed. Okay, you cannot get this in real time. It is a little bit delayed. Another one is, let me find it real quick, the Option Insider. The Options Insider, and this is another one where you guys can get bullish and bearish activity if you don't want to pay for it, and this is 100% free. Like I said, ODP is the position I actually have on. Institution bought about 25,000 ODP calls yesterday, so I'm in ODP, Office Depot, and actually the Nigerians mentioned that on CNBC yesterday. So these are the biggest traders in the world, and I'm basically trying to mimic their positions. Throughout the course of the day, I watch a proprietary-based scanner. I'll quickly show you my scanner. and I see about 8 to 1,200 trades go across the tape. And then I decide if I want to place my money on any of these trades, okay? When you guys are trading, simple and easy, you have to be able to risk money to make money. You cannot risk money, you cannot make money if you're not willing to risk money. So you have to be willing to put some money out there at risk. We always talk about it for a beginner. You can use a 20% stop loss, intermediate 50% stop loss. I don't personally use stop losses, but you got to be willing to risk money to make money. This is our option scanner that shows me every single equity option trade across every single exchange throughout the course of the day. So why do we care about unusual option activity? Simple and easy. Institutions have an edge. They have better access to information, technology, manpower, and capital. Simple and easy. What is unusual option activity, okay? So there are close to 8,700 publicly traded companies. Out of these 8,700 publicly traded companies, there are roughly 4,199 companies with options that trade in those stocks. Hypothetically speaking, if I was an institution and I knew a stock was going to go from $20 to $40, would I rather buy the options or would I rather buy the stock? Well, the stock's going to give me 100% gains. It's going to go from 20 to 40. But I could potentially buy a call option for $1, and that call option potentially could go from $1 to $20. So options represent a magnified ROI, return on investment. If you guys are not trading options currently, you're not getting in the wave of the future. Trading options is the wave of the future. It's been the wave of the future for a while. This is the best way to make the most amount of money in the shortest amount of time. We all want financial freedom. We all want to sit at the beach, go on vacation, have a nice car, afford to take our family to dinner. Well, options are the way to trade. So unusual option activity is driven by institutional order flow. Unusual option activity is an order that is above average daily volume. Does anybody have a specific stock they want to fire out there for me? Does anybody have a stock we can look at real quick? Any stock, any stock, any stock, any stock. Facebook. Apple, perfect, Apple. Okay, so we see here in Apple, in an average day, okay, Apple trades, on average, 475,000 options, okay? Sorry, that's today already. So that actually trades 336,000. So on an average day, Apple trades 336,000 options, 196,000 calls, 139,000 puts, for a total of 336,000 options. If Apple per se was to trade 670,000 options that day, that would be 2.0 times usual volume. If something's not usual, it is unusual. So we see here, this is how much Apple trades in a day. So I'm just sitting here, waiting, watching for unusual option activity. If you guys have ever turned on the TV and you've seen the Najarian brothers, Pete and John Najarian, talking about call options going from 20 cents to 40 cents to 80 cents within 30 minutes. I'm watching the exact same activity that they are watching throughout the course of the day. Big money, big order flow, institutional order flow. So let me just remove this here. So unusual option activity is an order that is above average daily volume in a given stock. These orders give us insight into what institutional order flow is doing. Let's retail traders see what smart money is doing, okay? You know, it's really good to, watch a trader trade throughout the course of the day if you're in a trading room, or if you like to watch CNBC to watch that. But the only true measure of anything in this world is worth the difference between what someone's willing to pay and someone's willing to sell it for. Why per se is Facebook worth $103 today? Well, that's what one person's willing to pay and one person's willing to sell it for. More aggressive buyers price goes higher. More aggressive sellers, price goes lower. Simple and easy. Why are the futures down today? Well, yeah, you could say the futures are down because of oil. But in theory, every $10 in oil should be 1% higher GDP. So if oil is cheaper, that means consumers have more money to pay for other goods because they're not spending it on gasoline. So institutional order flow is the only way, in my opinion, to consistently make money in the long term, and I've been proving it for over 14 years. I graduated college at 22. I've been trading the exact same way for the last 14 years. If you guys have any questions throughout the presentation, please let me know as well. Okay, so what kind of stocks can have unusual option activity? There are nearly 15,000 stocks to trade throughout the course of the day. I will trade any single stock that I think represents good opportunity. And I'm going to teach you guys my proprietary based trading plan today. It's called the Oak Ribbit Trading Plan. You can write it down if you want. We'll talk about it a little bit later. It is OCRBTT, the Oak Ribbit Trading Plan. And I'll teach you guys how you can go through any single order you want and decide if a trade is a potential good setup or not. This is a lot of trades out there. Okay, trading options is a lot easier than everybody thinks. Okay, there's only two kinds of options. There's calls and there's puts. When I was on the trading floor, we used to look at implied volatility a lot. As a retail trader, no retail trader should be looking at implied volatility. They shouldn't. Okay, that is way above their head. If you've been trading on the trading floor for a very long time, then maybe implied volatility matters. The only thing that matters, if you buy an option, are you going to make money on it or not? The implied volatility can move all over the place. But if I buy 10 options for $1, okay, and I risk $1,000, where is my risk? Where is my reward? Where is my break even? And what kind of time frame I'm going to have on a trade? And we're going to walk you guys through my proprietary based trading plan. So at this end of the presentation, you'll have a very, very good idea how if this kind of trading can help you guys potentially make more money. So why is unusual option activity the best way to track big money? I don't know if you guys have ever read a book called Flash Boys. It's written by Michael Lewis. Michael Lewis has written books on Moneyball, The Big Short, which is now in the movie theater, Liar's Poker, A New Thing, and basically dark pools were created to not let algo trading take over the game. Okay, in the option market, there is currently no dark pools. Let me repeat that again, guys. In the option market, there is no dark pools. So if some institution, and I'm going to tell you guys a little secret, if you don't know it, you should know it, and you should memorize this. Institutions trade on insider information, period, end of sentence. If someone tells you that institutions don't trade on insider information, that is insane. They all have insider information. There's a show called Money Greed on CNBC, which talks about insider trading. Arthur Stewart got in trouble for it. They tried to take down Mark Cuban. Raj Rotman got in trouble for it. Okay, institutions trade on information that the general public does not have. So what happens is they come up with a trade. Okay, so they are upstairs based on maybe there's a same store sales number, maybe there's earnings coming up, maybe there's an upgrade, a downgrade coming up, and they say, hey, let's say I think XYZ is going to go from 20 to 30 in the next 6 months. They'll say to their option guy, hey, what's the best way I can make the most amount of money if I think XYZ is going to go from 20 to 30? And then the option strategist will come up with a trade. Then they'll shop the order to Citadel, Goldman Sachs, Morgan Stanley, Merrill Lynch, and then the trade will get executed. The minute the trade is executed, okay, I will be notified through my scanner, and it becomes a public order. So one of the greatest things about this is I am trading on public information, guys. Okay, I repeat that. I am trading on public information. I am not trading on insider information. If they have insider information, that would be great, but I am trading on public information. Okay, I want them actually to be trading on insider information, So I can make money on the trade, but once it's announced to the public, it becomes a public order. Is the volume of the option the same as the volume of the stock direct? No. Okay. So once the trade is executed and then comes across the tape, you know, I can show you one today in JP Morgan. Let me just show you a perfect example of how I'm up like $5,000 in JP Morgan today. $4,000. So today in JP Morgan, let me show you the signal I saw going across the tape. A trader came in and bought JP Morgan weekly calls, okay? Weekly calls, 1-863 calls. They started paying 65, 68, and then I came in here and I said, hey, I think the market's going to rally. I could buy some of these JP Morgan calls. I paid 54 cents, and you can see my profitability is right here. Okay, so just as one single little trade today, I am up $4,000 in JP Morgan. Okay, and this is a real dollar account. This is a real trading account. Okay, another signal we saw today in ExxonMobil. Trader came in and bought Exxon Feb 82.5 calls. Let me show you the signal I saw going across the tape. So a trader bought 6,619 Exxon Feb 82.5 calls for 70 cents. I came in, I paid 72. I bought 200 of them, and I'm up $1,300 in profit, just like that, guys. Okay? So I watch this institutional order flow. I'll take you guys through the trading plan, how you can decide if these are good trades or not for you, and then I allocate capital on these trades. Those two little trades has me up $5,000 in profits just today. Just those two trades have me up $5,000 in profits so far. Okay, here's an example of Boeing. Let's go through the trade, and we'll talk about the exact trade and what would happen if you potentially bought 20 of these options in just a 20 lot. We're not talking about going out there and buying, you know, a couple hundred of these, 20 of these options. So a trader came in and bought 3,735 Boeing December 147 puts for 55 cents. On the offer, the stock was trading 147.98 at the time. This is an opening position. And I'll teach you in the Oak Ribbon trading plan. The first thing I look at is volume versus open interest. I always want to make sure the volume is greater than the open interest. So a trader bought 4,000 of these, risking roughly $150,000 here. Hypothetically speaking, let's say you just bought 20 of these. Okay, you came in, you saw this signal. You go, Andrew's been teaching me how to read the order flow. This looks like a good trade. Volume is greater than the open interest. Technically, it looks like the chart's going to roll over. I'm going to buy 20 of these options. Okay, you buy 20 of these options for 55 cents. And I'm not showing you crazy orders from 2 years ago, 5 years ago, even 2 months ago. I'm showing you real orders that happened today, last week, 2 weeks ago. Okay, because this is the kind of thing that keeps me in the profitability and in the green over and over again. So if I bought 20 of these for 55 cents, and let's say, hey, Andrew taught me to use a 20% stop loss. So I'm going to use my stop loss, and I'm going to make my stop loss at 40 cents. So I'm risking 15 cents on a 20 lot. 15 cents on a 20 lot is $300 a risk. Okay, $300 a risk. Well, we see Boeing here. And this is at the time where they bought the puts. And we see here, maybe, you know, it's a pretty strong chart, but we see it starting to top up here, and then we see that put activity, okay? Do you think this trader had any information? Do you think this trader knew the stock was going to roll over? Well, let's see what happened to these puts just in the next couple of days. The stock sold off by 4.11%. And this is an example straight from our scanner, okay? So the stock sold off 4.1%, okay? These puts, okay, a lot of my subscribers got into these. I actually did not have a position in, went from 55 cents to $8, okay? So the stock sold off 4%, but how much did the option move? The option moved 16 300%, from 55 cents to $8. Hypothetically speaking, if you guys took the course, you saw this signal going across the tape, and you say, hey, I think Boeing's going to sell off. I can buy some of these puts. We all know when you buy options, the most you can lose is what you pay for that option. Okay? I'm not going through all the charts and making up random trades myself. I'm watching institutional order flow. I'm watching the biggest and best traders in the world basically jumping on their piggyback, jumping on their back and letting them taking me across the finish line. Okay? So I could have risked $300 on this trade, and this trade would have netted me $14,600 in profit. Wow, what a great trade. Okay? I could have risked $300 and made $14,000. And stuff like this goes across the tape almost every single day. Okay? How would you like to take $300 to $14,600? I don't think there's anybody here that would say that's a bad trade. That's a bad reward to risk setup. And it comes from the initial institutional order flow, guys. I'm not going through the charts and making the trades myself. I am just watching the biggest and best traders in the world, and then I'm mimicking their positions. Okay? Does anybody have any questions so far? Good. This is an order in PMCS. We have a question here. Hey, Andrew, I love the system, but I don't have time to sit in the front of the computer. Why don't you provide a service when to get in and out? We do provide a service. Today we're just going to be talking about the course, but we do provide a service that has entries and exits via text and email. So we see a trade here in PMCS. A trader bought 14,726. PMCS, okay? January, 7 calls for 85 cents. So someone came in here and said when PMCS was trading, let me see exactly where it's trading, right around 720. I want to buy January 7 calls for 85 cents, okay? And I want to buy 14,000 of these. This trade right here is a $1.2 million bet, guys, okay? This trade is a $1.2 million bet. Someone's risking $1.2 million that PMCS goes higher between now and January expiration. Well, what happens? A coincidence or not? I will say not a coincidence, okay? Trader came in, bought these, and then the stock popped higher up to $10.30. If you bought 20 of these calls, that's it, guys, a 20 lot. You could have risked, 20% stop loss, so you would have risked about 20 cents on a 20 lot, $400, and you could have potentially made $4,900 on $400 of risk if you use the stop loss that we teach you guys in the course. Okay? So why take these trades? Simple and easy. The hedge funds and bigger traders have more information on us. That's why they're always getting inside for insider trading. Trade with the pros. Imagine knowing Carl Icahn or David Einhorn position before it is disclosed. And most importantly, all these trades are public orders, guys. All these trades are public orders. So how do I take advantage of this? Okay, you need to have a trading plan in place. You need to know if the trade is potentially speculation or hedge. Calls are bought for one of two reasons: speculation of the upside or a hedge against a short stock position. Puts are bought for one of two reasons: speculation to the downside or a hedge against a long stock position. Okay? I need to make sure probability is on my side. So we have developed a trading plan for you guys so you can put probability into your corner. I have a question. I am a pro futures trader, but I have zero expensive options. When I go in with 100 lot calls, how can I get out? There's enough lots. Depends on the stock. If you're trading Facebook 100 lot, that's a nothing. JP Morgan 100 lot, that's nothing. Something, if you trade 100 lots in something like Tesla, will be a lot harder to get in and out. Just so it depends on the stock. So here is the secret sauce, and I call this the Oak Ribbit Trading Plan. And I will stay on as long as I can so I get the call from the CNBC to tell me I have to go on their show live, which should be about 10 minutes. So this is called the Oak Ribbit Trading Plan. I give you guys 2 really good websites where if you don't want to pay for any of these unusual option activity trades and you just want to see them, you can go to optionmonster.com or the optioninsider.com. The problem with the trades on there, they are half an hour delayed, so a lot of times you won't be able to get into the trade because the trade will already moved. So the Oak Ribbit Trading Plan, OCRBTT. First thing is the option volume versus open interest. I always want to make sure volume is greater than open interest. Okay? So I want to make sure volume is greater than open interest. Next thing I look at is the chart. If calls are being bought, I want to make sure the chart is bullish. If puts are being bought, I want to make sure the chart is bearish. Then we have R&R. Some people like rest and relaxation. I really don't like it that much. I like a risk versus reward setup. Okay? And in our course, we're going to teach you guys how you can set up stop losses for beginner, intermediate, and expert, and how to pick your proprietary-based exits. Okay? They say that it's really important to get on your plane and then make your plane, but it's more important to get off the plane, right? So we're going to teach you guys a system where you can use stop losses and targets, and your target's going to be based off your stop losses. Break even. You always want to know your break even on expiration. And TNT. Tacos and Tequila originated in San Diego, but I like time and target. Okay? How much time do I want on this trade, and what is my target? JCPenney. Let me look at JCPenney real quick here. So JCPenney was less than 2.0 times usual volume. So it looks like volume was less than open interest, so I wouldn't want to make a trade. So someone just said, hey, we look at JCPenney, 15,000 JCPenney calls traded, open interest was 54,000. That does not go into the first part of it, so I want to be not in that trade. Okay, I always want to make sure volume is greater than open interest. So here's Boeing, and based on our trading plan, how does this trade look? Okay, let's walk you through this trade and show you guys why this was a good setup and how you could have made $14,000 in the course of a couple days. So the first thing we see, Boeing, and this is the exact order from the scanner, 3,735 Boeing puts trade here. Okay, what is the volume? The volume is 3,700. Open interest, 575. So criteria 1 has been met. You can use this stuff for day trading or swing trading. So if you like to day trade stock, you like to day trade options, you like to swing trade stock, you like to swing trade options, this is a perfect course for you because you can use any of these in there. I use Thinkorswim for all my trading. Then we have charting. I'm a big Ichimoku Kinking Hoi guy. If there's calls being bought, you know, yesterday I actually ended up losing some money in WLL. I saw calls being bought in WLL. I should have looked at the chart, stuck to my gut instinct, and knowing the chart was under the cloud, not participated in this trade. So I only want to take longs above the cloud. Okay, Ichimoku Kinkin Hoi, nothing in the cloud, and then shorts under the cloud. Okay, so make sure the call activity lines up with a strong chart. Make sure put activity lines up with a weak chart. Then we have R&R, risk and reward. How much am I willing to risk on this trade, and how much do I want to make on this trade? I look at it one of two ways. I can look at it as a percentage of my total book, or I can look at it as a dollar amount. Okay, so I can look at it as a percentage of my book or a dollar amount. The difference between good traders and great traders, guys, good traders think about how much money they can make. I'm not a good trader. I'm a great trader. If I am wrong, how much can I lose? Okay, I have no capability of ever blowing out my trading account because I know on every single trade how much money can I lose. Okay, so don't think about how much money you can make. Think about how much money you can lose if you're wrong. Okay, stop losses. We always talk about stop losses for a beginner. Beginner, 20% stop loss, we think it's a good stop loss. Intermediate, 50% stop loss. And then an expert, I do not use it as a stop loss. But now, number one concern is my risk. Risk is so much more important than how much I can potentially make. Time and target, this is something we're going to teach you guys in our proprietary-based course, how to figure out exit plans as well. We said it's important to get on the plane, let the plane take off, but exits are so much more important. So, how to find out the exits. Where do I want to be taken off a trade where I have that proper and good reward to risk setup? A couple words from our subscribers. Charlie said, I want to thank you again for the opportunity for sharing your trading experience. Having joined the trading room a couple of weeks ago, I made $27,000 in craft this morning thanks to unusual option activity plan you taught me. Matt says, as a new options trader, I lucked into a seminar about unusual option activity in August. My first week generated over $1,000 in profit, and yesterday another one over $2,000. Steve says, it helps me stay in the trade to maximize profit, helps on reversals, and this was just my first day. Wish I had this 29 years ago. Thank you so much, great team. Your team deserves kudos. Okay? Who is this course good for? This course is good for, CNBC, hold on one second, guys. This is Andrew.
Hey, Andrew, this is Stephanie with CNBC. How's it going?
Good, how are you?
Good, good. Ready to start Trading Nation?
Yep.
Okay, great. Neither.
All right, I'll be able to go for a couple more minutes, but this course is good for beginner, intermediate, and expert. Andrew,
hold on, please.
Yep. A trader who wants to have financial freedom, stop worrying about their bills, and potentially make more money trading. A trader who actually wants to learn and stop guessing for random trades. Anybody who wants to master unusual option activity and could potentially make more money. Things that I guarantee about this course. We can never guarantee profitability, but we have 100% money back guarantee. If you buy the course today and you do not like the course, I will give you your money back. We have 25 spots available, and the price goes up to $497. This is 80% off. We have 13 different courses. This is the best course that we offer. Hands down, bar none, 100% money back guarantee. So let me put the link in here, and then I'll let James jump on here and kind of take you guys through all the Q&A here. So it is 25 spots. It is on demand, okay? You will learn how to read options volume versus open interest, why average stock volume is important, how to look for speculations versus a hedge, opening versus closing positions. You'll learn the Oak Ribbon trading plan with stop losses, break even, time, and targets. And you'll also get one follow-up session at the end of the month. This will be 1 hour where you get to watch me trade live. This is $97 total. It's usually $4.99. The link is optionsonthefloor.com/toast. 4 things I will say about the course. Number 1, 100% money back guarantee. If you do not like it, we do not want your money. No. Yes, I'm here. So 100% money back guarantee, that's number 1. Number 2, we have 25 spots. Number 3, this is our number 1 selling course. And number 4, we have a follow-up session where you can watch me trade it all live. So make sure you guys sign up. It's $99, optionsonthefloor.com/toast. And then James is going to take you through the Q&A. Thank you guys so much. Sorry I have to run out to CNBC. Thanks, guys.
Great. So I want to take as many questions as I can from you guys right now. I do see someone here saying that the link isn't working. It should be working just fine. I just tested it. One thing that you might want to consider doing if you can't get the link to open for you is removing this last slash after the link here. You can see it brings me right over to the page for you to get it. But someone says, do you need software that shows the unusual option activity? So Andrew showed you guys a couple of places that you can get this order flow from. However, my favorite solution for finding the order flow if I don't have a scanner is using the built-in function in thinkorswim. So if you actually go to the thinkorswim platform and go to scan, you can use this option hacker in thinkorswim to do what is called a sizzle index scan. And the sizzle index is thinkorswim's way of showing you what stocks had unusual option activity. After that, I can then go into the options chain and see what the order flow was in that given name. So what I see here is that today what's driving all of the unusual option activity in JNS, Janus Capital, is a big buy of the Feb 14 strike puts. You see 10,000 lot traded there. So then I can go and look and see, okay, what can that tell me about this trade in Janus? I go look at the options order flow here in Feb. And let's see, the Feb 14s. I can go look at the options order flow here in Feb, and I can see what the open interest is and the volume, and then figure out from there what it is I want to do with the position. So optionsonthefloor.com/toast is where you get this workshop at, and I'd be more than happy to continue to answer any questions that you guys might have about this. One thing that we always try to do is, ask you guys what your familiarity is with unusual options activity is when we start the presentation. So now do you guys kind of see the value of looking at order flow? One of the things that I think is really, really great about trading unusual options activity, and the thing that Andrew kind of glanced over, was that it is something that is totally applicable to any type of trading plan out there. So if you consider yourself a day trader, a swing trader, a long-term investor, a income trader, a directional options trader, there's going to be signals and information that you can use for all of those different types of trading plans when watching unusual option activity, because this is something that shows you what institutions are doing. And institutions trade along all of those different plan types, right? They trade options that expire tomorrow. They trade options that expire next week, in 3 months, 6 months, 9 months, and 3 years. So all I need to do as a trader to kind of take this information and fit it into my personal trading plan is look for the order flow that is the most applicable to me. Okay? So is this all video trading with no live trading? No. So what you get when you make this purchase is our unusual option activity trading plan workshop on demand. You get that right away, and you can start going through that right away as well. You have access to that forever. You'll never lose access to that. So if you make your purchase today, you go through the workshop, go through all of the materials that come with it, and then you can come to the bonus live Q&A session that we're going to be having on January 20th from 10 a.m. to 11 a.m. Central Time, and watch Andrew trade this stuff live during the day and ask as many questions as you have about the workshop or about unusual option activity that you have seen since the time that you took the workshop. Someone says, can you see if option activity is opening or closing in thinkorswim? Yes, absolutely, because remember, the only thing that I need to check to see whether or not a position is opening or closing is volume and open interest. So think about that logically. If I have an order that comes across for 5,000 call options being bought in stock XYZ against open interest of only 100 contracts, well, then there isn't 5,000 contracts there for them to close. So if I flag an order in thinkorswim and I can see that volume is greater than open interest, then I know without a doubt that that trade is an opening position, right? If it is not, then I cannot determine with 100% certainty that it was in fact opening. And if that is the case, I definitely do not want to take the trade. I only want to take trades that I can confirm are opening without any doubt. Someone says the best OI numbers. So that's kind of a backwards way of thinking about this. You don't want to think about generalized ideas like that. You can't say that, hey, a 5,000 lot against open interest of 100 contracts is the best type of signal that I can find, because everything is relative, right? In Apple, a trade might come across for a 100,000 lot against open interest of 40,000, and it's considered opening, but it isn't necessarily good unusual option activity. So don't think about the best open interest number. That's not really a way to go about this. What you want to do and use open interest for is to determine whether or not a position is opening or closing. Now, it is better to see a larger ratio of volume over open interest because it shows that the trade is much more significant. It shows that a trader is coming in and putting on a much larger position relative to all the open interest, right? And I can also look at open interest across all the options to see whether or not a trade is actually, quote unquote, significant in terms of volume. Does that make sense? Because every single stock has its own average daily volume. Every single stock also has its, own kind of average open interest. So it's different from stock to stock. What is a 10,000 lot in one stock might be only, and huge unusual option activity in one stock might only be a drop in the bucket for another, right? Like if we talk all the time about Apple and Twitter and Facebook as an example, it doesn't really catch unusual option activity in names like that because it would take such a large order to even move the needle in those names because they trade so many options throughout the course of a day. So if anyone has any questions or specific stocks that they would like to look at to see if there's unusual option activity, if you want me to break down order flow in any today, I'd be happy to do that for you guys as well. Someone says, is that the only live Q&A? Yeah, so this is going to be, you get the one Q&A session, you get the recording of that as well. After you go through the workshop and come to the session, I think that you'd get pretty much all of your questions answered. The workshop itself is really, really comprehensive. There's not a whole lot that's left out of the workshop, meaning there's not too much that's going to come across the tape that's going to confuse you after you take this workshop. It really is a through and through overview of this plan and how to use and apply unusual option activity to your daily trading plan. Someone says, wouldn't you need an option scanner similar to what Andrew uses? Wouldn't there be a high cost for a subscription to such a scanner? So we offer a scanner, and there's a lot of other scanners you can get online as well. But Andrew showed you two places that you could get this information for free, and I showed you how you can use the Thinkorswim scanner to get that information as well. And I'm not super familiar with the TradeStation platform, but I've been led to believe that there's a very similar tool in the TradeStation platform to that Thinkorswim one that I just showed you guys. Yeah. So some people asking about stocks. So this is the thing that most people kind of get confused about in unusual option activity. Stocks, I see a lot of people asking questions about Tesla, Netflix. Stocks like Tesla and Netflix don't really get unusual option activity. You can take a look and see here that today on my scanner, there is not unusual volume in Tesla or Netflix. And if I were to run this same query in the Thinkorswim platform, it wouldn't return anything either because there needs to be an enormous, enormous amount of options traded in Tesla, in Netflix, in Apple, or in any of those really heavily traded names for there to actually be unusual option activity, right? We tend to see activity in stocks that are a little less, well known, and that's perfect. That's exactly what I want. And the problem with talking about Apple or Google or Amazon in terms of unusual option activity is that those names are so huge and they make up such a large weight of so many index funds and ETFs that traders oftentimes will trade options in those names to hedge out or leg out their exposure to that underlying in whatever their basket or fund is that they hold. So it gets really difficult to try and suss out what it is that they're doing with large blocks of options in stocks like that. Does that make sense to everybody? Does that make sense? The same thing goes for ETFs and ETNs, right? The thing about those is that they're oftentimes used to hedge against baskets of stocks that institutions hold, right? The same thing goes for indices. If I'm looking at order flow in the SPY or the Qs or the diamonds, a trader can be using those for a hedge or a speculative bet. And the likelihood that they're using them for a hedge is so much more increased in those names because those are index funds that traders use as hedging vehicles all of the time. So our best and most probable for success options flow is going to be from stocks that are single name equities that don't really have a whole lot of correlation or use in terms of hedging for other types of products. I missed the toss UOA area. Yeah, so if you go into Thinkorswim, and go to the scan tab here and click on option hacker, if you click this little sizzle index button, it'll do their pre-built scan for unusual options activity. Now you can see that it returns a ton of stocks right off of the bat here, right? We get a whole lot of results if we use this scan. Now that I have this set up, I want to get more granular with it. I can use all these different metrics to find order flow that makes more sense for me. So I only want to see stuff that had 4 times unusual option activity today, right? And then make a determination on, what order flow makes the most sense for me at any given point. We have a big slide in the price of oil today. So what if I wanted to see where they're doing unusually large put buys today in oil names? Well, I can do that too. I switch this to put sizzle index. I'll say, you know what? Tell me where they're trading 3 times the number of average daily puts traded in oil names. And then I can do a cross section with industry, add this to energy, and I can, boom, now I filtered it down to 20 stocks. So these are the 20 names that institutional money is trading large amounts of puts in today, right? And that's significant to me because, hey, crude's down a lot. If I want to see where they're pressing their bets, I can take a look at those names and see what the options order flow was like. Likewise, if I'm someone who thinks that oil has become oversold at these levels, I can look for where they're picking up longs. How much does the alert service cost? So we do have an alert service. We have a couple of different packages. If you want to know more about that, you can send me an email, james@alphashark.com. I'll put my email address in here as well. So please feel free to shoot me an email. And not just about that, if you have... So any other questions that you guys might have here? Sorry, that threw all my setup off here on my panels. I'm trying to reorganize everything here, but I'll put the link in here again for you guys as well because I can see now that it has been it's been lost. So optionsonthefloor.com/toast is the link. I'll put it in the chat box and the question box here. Everyone is kind of starting to filter back in here now. Yes, Brian, any question that you have? Sounds like a directional trading. I do mostly credit spreads. Do I need to change my style? Great. So that's a great question. In general, we tend to stick on the side of directional plays with unusual options activity. Now, there is ways to use this information to trade credit spreads as well. We've focused 100% totally on option buys and big blocks of options being bought as unusual options activity. So what I need to look for if I'm looking for opportunities to trade credit spreads then instead are big blocks of options that are being sold. Now, big blocks of calls sold, those don't necessarily set up the best for credit spreads because they're probably and oftentimes are selling calls against long stock. They don't necessarily do that to get short. But one of the best types of signals I can see unusual option activity wise is short puts being traded. So if a trader puts on a big opening position where they are selling puts, what is it that they're doing? What is the market thesis that they are expressing with that trade? Well, they're drawing a line in the sand basically, right? they're coming in and saying, hey, you know what? Here's this level in stock XYZ that we think the stock is going to stay above. So what we're going to do is we're going to sell puts on that strike, and if it stays above that, we collect all the premium. If it goes below that, we get put the stock, and maybe we get it at a discount. So what I could do then, because I don't like to sell puts outright, I can look to set up put spreads using that type of information. And we actually go over that in the workshop. We actually go over that in the workshop, how to use order flow to set up potential credit spreads as well. So this 100% does apply to credit spread trading as well. That's just not, you know, our style. When we trade unusual option activity, it's pretty much it pretty much does line up for all types of trading styles, because the institutional trading universe covers all trading styles as well. Someone says, after I review the course material, will I be able to trade tomorrow? Yes, so there's a lot of material to review. It's not a short workshop, but you will be able to tomorrow look at the order flow and make determinations. Yes. That's not to say that there will be any interesting order flow tomorrow. We're kind of in a weird time right now in the market where we are in between catalyst events. We had our Fed minute. We had our FOMC announcement. Everyone was waiting for that. Now we're kind of in between things until we get into the next earnings cycle, so the market's pretty choppy. When that tends to happen, institutional money isn't quite as active. Institutional money isn't quite as active. Makes sense, makes sense. Yeah. Our scanner is listed on our website for $3.99 a month, I believe, but we can do much better than that. If you want to shoot me an email, james@alphashark.com. So any other questions, guys? I think I've got about 10 minutes left here, 10 minutes or so left. We have a lot of different packages for alerts. I do believe that if you take this workshop, you are given a chance to check out our trading room at a significant discount for a month, but I'm not 100% sure on that. So any other questions, guys? Any other questions? Does this course cover pinning concepts or strategies? No, I think that in general, trading stuff for pins is a really bad way to go about it. I think that though traders that look to try and trade strategies based on pins oftentimes find themselves missing that pin, because it doesn't happen all that often. And you know, traders tend to think that it does because you know, whenever we do see a big pin happen, the options universe kind of, yes, James@alphashark.com, the options universe kind of goes crazy over it, saying, oh, look at these market makers, they're squeezing out all these traders and pinning it here so they all see their options positions go to zero. But that really doesn't happen. Market makers could not care less about trying to pin a stock somewhere. And unusual options activity really doesn't give me any insight on where a stock could possibly or potentially pin. That being said, I don't think that it happens all that often. I cannot go to the website homepage. You should just go to alphashark.com. It should come right up. We have a bunch of stuff on there and a bunch of videos on our blog as well that kind of go over trades of the day and unusual option activity setups. So if you kind of want to get an idea of what type of trades come across in a day, you can go to our website, go to our blog. We shoot videos almost every day that cover an interesting trade that came across the tape that day. So if you're kind of curious about what the order flow we trade actually looks like, that's a good place to go and get that information. But that's not to say that that's the only type of order flow that comes across in a day, right? Like I said, we like to trade directionally, so we look for directional bets. We look for order flow that implies possible directional moves. if we were credit traders, we would be shooting videos about completely different things, right? So any other questions, guys? Any other questions? Seems like everyone is starting to filter back in here. Day trading options skill? I'm not 100% sure what you mean by that, but in general, options order flow presents good day trading opportunities pretty often because they trade a lot of weekly options. That trade in Boeing that we looked at, that trade, what we showed you was how it went from 55 cents to $7.85 the next day. What we didn't talk about is that in that same day, those options went from 55 cents to better than a triple based on the movement that it saw into the close. So there is opportunities to day trade weekly options, and in that particular example, the December contract did represent the weekly option. There is opportunities to day trade weekly options using order flow as a guide and a kind of entry signal. That's what I'd be looking at for if I was concerned with day trading. We see unusual option activity all the time. From Monday to Thursday, equity options traders and institutions are going to trade the weekly that expires that Friday for really short-term types of plays, and that's the type of order flow that I would be looking for if I was someone who didn't want to take anything home with me at night and wanted to end the day completely in cash. So any other questions, guys? I probably have time to answer one or two more questions if you have them. I'm sorry for the little snafu there with the webinar room. We're not 100% sure why that happened. How much time do I give myself to achieve targets? So it all depends on the type of trade, right? Again, it's really difficult to generalize because there's so many different ways I can apply order flow to my trading plan. But if I am setting up a day trade, I give myself that day, right? So if I'm looking at options that are expiring this week that are hitting the tape today, and I know that I don't want to carry them home with me tonight, then my time frame is today. If I see options in February, well, then I have a lot more time. And, going forward to about 2 weeks out, if the move hasn't happened for me, then I would probably start to think about exiting because time decay starts to pick up and grow exponentially once we get through that point. The UOA Master Course is on our website is significantly more expensive because it has a ton of supplemental material, and the workshop itself is much longer than the one that we're talking about today. The one we're talking about today is about 2 hours and 45 minutes, I believe. The Master Course is much longer, but it goes into detailed breakdowns of every single type of order flow that can come across the tape in a day, even the ones that we don't care about. So it's more comprehensive. It's not something that's necessary to learn unusual options activity, especially if you are kind of new to the idea of order flow trading and unusual options activity. So any other questions, guys? Any other questions? I'm going to put the link in here again one more time. I think I have about a minute or so left here. optionsonthefloor.com/toast. How many times during an average week do you see unusual activity? That's actually a very difficult question to answer. The problem with that is there is a pretty kind of seasonal flow, and I don't even want to say seasonal. It all depends on what's going on that week. So, last week was one of the quietest weeks I have ever seen in options order flow because we had the holiday, and for whatever reason, probably because of the lack of catalysts, we didn't have any type of really significant order flow coming across the tape. So does that mean that in order to really learn this method, we're going to have... No, absolutely not. Absolutely not. This workshop is comprehensive and covers everything you need to know to get started here. Is there a minimum value that I consider? No. Absolutely not. So 1,000 lot can be unusual volume. A 10,000 lot can be unusual volume. It all depends on whether or not the volume in the underlying, the average volume in the underlying is significant relative to that trade, right? So if we see a lot of times options order flow in stocks that never trade options, that if you take a look at the open interest stack across all expirations, there's no open interest, there's zero volume. They come in and buy 1,000 lot of calls. Well, that's pretty significant, especially if the stock is a thinly traded stock as well. And we actually go over that in the workshop also, is how you can take these ideas and also use them to apply stock trading plans as well, if you're not actually willing to trade the option. Yep. So I think that we're pretty much at the end of the session here. It is 1:30 Eastern time now. So Dan, I don't know if the next presenter is T yet.
Yeah, James, I think you can wrap up if you're ready.
Okay, great. So I want to leave you guys with the link here one more time. Like I said, everything that we talked about here you get in this workshop, and a bonus live Q&A session on January 20th from 10 a.m. to 11 o'clock Central Time. So that's 11 to 12 Eastern, where you can ask as many questions as you want about what you learned in the workshop and see those ideas and concepts applied in real time during the trading day and as order flow is happening in real time. If you have any other questions about this, please feel free to email me, james@alphashark.com. Anything about this offer or anything we talked about today, or general trading questions. If you learned something, if you have comments, questions, or concerns about anything we presented today, I'd be happy to chat with you. So please drop me a line, james@alphashark.com, and go to optionsonthefloor.com/toast to take advantage of this offer. It is a huge discount. So thank you very much, everyone, for having me and for asking such good questions this whole time. Everyone have a fantastic rest of your day and rest of your week. And as always, happy trading.